In this video, I thought what we will do is take a look at the cycle envelopes that are found here on the member homepage. Now the section is down here. You can see cycle envelopes. We just simply click on that and it brings us to the cycle envelope page. Now let me just go ahead and move this camera here so that we can get it all in there. Okay, great. Now what you want to notice here real quick is it says refresh your browser to make sure you get the latest charts. And that is, a lot of browsers tend to cache the last page that when you last came to this page, it might cache it so that it would come up quicker the next time you visited. But unfortunately, when it caches, it has the old information. So if I've put up new charts here, you may not see them and then wonder how come it's just old stuff. So make sure you refresh your browser that you got the latest. Now I have been making a concerted effort to update the charts, usually around the middle of the week and the end of the week. So they usually are no more than 2 or 3 trading days old. So like on a Wednesday, I may have upgraded the charts, and then again Friday. So around Wednesday and Fridays is about the usual that I've been updating them. And you'll say here the updated. So in this case here, it's updated to just last Friday, May 3rd here. Okay. Now, one of the things that I want to point out is if you have gone through your lessons on the guidelines, it's best to trade based on the guidelines, and I want to show how you can use, for example, these cycle envelopes to help you do so even more so. For example, here's the British pound, and within the green envelope here you can see how it kind of highlights the cycle. It's a lot easier to see the cycle swings up and down for the short term as well as the long term, which is what the blue here is trying to highlight as it is drawn outside the longer term move here, is that here you can see that based on this short-term cycle pattern that we've highlighted here, that we might anticipate that the British pound is very close to forming another one of these cycle swing tops that you see here and here and so possibly here. This in itself is just, giving you an idea that we're close to that time period, but that doesn't mean that you look at this and you go, hey, time to sell, time to buy, time to sell, time to buy, time to sell, but based on this. Absolutely not. This is what the guidelines and the F-dates are for. What this might highlight here for me, for example, is that we may be nearing the end of this short-term run up and ready for a pullback. So if I'm long from back here off of an F-date buy setup, I might be trying to shore up my stops. Okay, if I'm trailing them, I'd be shoring my stops up, let's say below this low that we have here for Friday. Because if prices break below that, it's likely now making this pattern here going down and will likely move down until this time period approximately right here. And you can certainly count bars if you want to anticipate how far from here to here would be to here. But the point I want to make here is with the guidelines and the F-dates, what we're doing is we're looking to buy higher swing bottoms, and in this case here, or sell lower swing tops. And in this case, this would definitely not form a lower swing top, because you can see that the amplitude of this cycle here is higher than here, just as this is higher than here. So in this case, we look to buy back here because this was above this one here. This was good, and you can see that paid off. Then as it pulled back again, this was higher than this here. We would buy again, and again it has paid off. But at no time would we have been looking to sell here because it's higher than here, for example. And that, although you may have made a couple of dollars, the probability would be always against your trade. Okay, so that is one of the things. Now back here, for example, this is interesting. Is here this would have been considered lower, for example, than here. But back when this was forming here, we may have noticed that we had a swing top here, and that would have made it higher. Or by the same token, we would have noticed that the blue envelope was curling up, and so the longer term may have been moving, starting to move to the upside. And certainly if we have our weekly F dates, we may have been noticing that we were forming a weekly swing bottom here. So again, even though this turn here, the swing top, would have been considered lower than here, we had other indications to warn that perhaps the trend for the near term was changing. Here we're looking at possibly, as you can see, the longer term envelope, it's anticipating the possibility that we could be making this a weekly top. For example, could be this week or next week, and we have a W date, a weekly date that shows that some kind of weekly swing. Well, there's already been a potential weekly swing bottom possibility bar formed, so we have to be careful that that's not what is being predicted. But the point I want to make here, though, I don't want to get off course, is that while this may indicate to you that we're probably pretty close to making a weekly top here, that doesn't justify that we should start selling off of a higher swing top. But instead, if this in fact turns out to be something like this right here, then what you want to do is you want to wait for when you get something like here, where you're starting to make this lower swing top compared to the actual weekly top itself. So keep with that pattern, and you'll be in more good trades than bad, and your losses will be a lot less. Okay, well, that's it for the cycle envelopes in relation to the guidelines, and I hope that helps.